Hello and welcome to MasterChartsTrading.com market recap for the weekend on Friday, February 13, 2015. In this week's recap, we'll look at major indices as they hit all-time highs, and also we'll look at market breadths, and the market breadths is not yet overbought. In other words, we have some potential to the upside still. Selling in bonds continued, but the longer-term trend in bonds is still bullish. And also we will look at some possible targets for gold and gold miners correction as it extended this week. And natural gas, we will look at natural gas and see if it's finally ready for a sustained rebound. I also wanted to mention that all of the information in this video is for educational entertainment purposes only and shouldn't be construed as a recommendation to buy, sell, or sell short any of the said securities. It's kind of standard disclaimer. Alright, let's look at the S&P 500. So I've shown this chart in the past several times. The S&P 500 is long-term bullish. There were quite a few buying opportunities. The previous two buying opportunities didn't really work out well unless you took profits immediately after the buy signal. But our latest buy signal was around February 6th here, and we entered the market, or rather February 5th, I'm sorry, and we entered the market then. So since then, we gained about 1.6%, but you know it's clearly bullish. So the breakout above the trading range that we were in is looks to be valid for now. And on the next chart, I'll show it actually is more clear. Okay, so the S&P 500, same thing, and several items on this chart. This is a market breadth chart, but this is a candlestick chart as well. So first of all, number one, new highs. Today on Friday we hit all-time high. Number two, we had this trading range that is hit 264, 2064 here, and then finally right here we broke out above the trading range and for 2 days closed above it, and then followed through the next 2 days and hit all-time highs. So that's definitely bullish. There is, as far as market breadth is concerned, we had a breadth thrust on let me see when is this, on February 3rd, I believe, and sorry, the breadth momentum oscillator, the volume momentum oscillator is above its 10 moving average, 10-day exponential moving average, so that's bullish. The advanced decline line is above its 10-day moving average, exponential moving average. There is a very, very small divergence in the advanced decline line. So right there, the advanced decline line hit 29.67, but today it only closed at 29.59, so it's slightly below the previous peak, and vice versa here. At end of December, we hit all-time high at 2093, but today the close was at 2096. So market went slightly higher while advanced decline line is very slightly lower. So this is probably not that important, I'm guessing. Elsewhere, the new highs, new lows indicator. Let me refresh the chart, see if there's a new reading. Oh yes, okay. So new highs, new lows is positive and in the positive territory. So it means more stocks are making new highs. And the price momentum oscillator, just a regular momentum oscillator, is above its signal line. and in a positive territory and not overbought. See, like here it was overbought at about 1.5, and then we kind of got our correction. But here we're at, just 0.5 above the zero line, and we're just starting this move up. So I think we have quite a bit of potential to the upside still. All right, let's look elsewhere. QQQ, Powershares, Nasdaq, Trust, it outperformed the general market by closing. I'll show you in the next chart, but important thing is that actually QQQ was had a buy signal even earlier on January 22nd, and the signal was never negated per our trading system. So QQQ is clearly bullish as well, and it just hit new highs 2 days in a row. And the next chart I'll show you. So this is QQQ Powershares Trust candlestick chart. It hit new highs on February 12th yesterday and today, 2 days in a row. So that's definitely bullish for the QQQ and for the general stock market as well. On the next chart, I have New York Stock Composite Index, and I've shown this chart in the past, and I highlighted this just really large bullish divergence that dates back to July of last year, and you can clearly see it here. So this is New York Stock Exchange advanced decline line and advanced decline volume lines, and you can see that they're making higher highs. But New York Stock Exchange Composite is making lower highs. So that's what's called a bullish divergence, and I think right now we are in the middle of that, or at the very beginning of that resolution to the upside, and of course we need to exceed these highs here. But already we have hit new highs in the advanced decline volume line and advanced decline lines. So this is looking bullish. The general broad market is looking bullish right now. Elsewhere, bonds, you can see, came under pretty strong selling pressure as early as February 5th, right there. Our trading system warned us about this. We exited all bonds positions on February 5th, and since then bonds lost over 4%, 5% or so. So as of right now, treasuries are still bullish. So I will be waiting for a re-entry opportunity. But this latest sell-off is kind of interesting. Let me show you on the next chart what I mean. See how right there it closed below this red line. Let me just disable this. This red line right there is a 50-day moving average, and today it closed below it, and this is a pretty bearish candlestick also. So 50-day moving average is kind of like a good proxy, and many traders will just simply sell below it or buy above it. And it's been above the 50-day moving average since September, and then now it closed below it. So we could see more corrective action, and potentially as low as 200-day moving average. So that's still quite a bit of to fall, especially if Tuesday rather we close again below the 50-day moving average. The very least, I think we can see prices as low as 122, so that would be a kind of like a target, or maybe 127. So like this area right here is a first target of correction, and if we see a bounce there, then on this chart it will be visible, and we will see a rebound in a rune, like for example here we could see it right there. Arun rebounded. So we'll see bonds are still under pressure, and we exited all bonds positions. let's look at gold. Okay, so this is gold spot price end of day. And I've shown this chart in the past. So gold came up to a kind of like a major resistance zone, and this resistance is dating back a few months. There was a lot of trading in this area, and gold kept bouncing back from it. So it did it again, and closed below the 200-day moving average right there, just kind of collapsed right through it, and then this week it closed below the 50-day moving average right there as well. And yesterday and day before, see how it tried to rally above and then failed, and rally above and failed. So it seems to be holding this resistance. There's resistance now in this area, like 1235 to 1240, and you can see there's a peak here as well. So there's quite a bit of resistance in this area right now, and gold seems to be reaffirming this resistance. So I'm guessing that we may continue something like maybe it'll come up and kind of roll over down. So we may continue seeing downside pressure in gold prices. I'm guessing that we will correct at least to 1200, because this is Fibonacci retracement from the beginning of the advance. So around 1200 here, and possibly lower to like 1160 area, 1170. I mean, we could also collapse all the way down and make new lows as well. But at the very least, I'm looking at 1200 to possibly 1170, and around this area. All right, so gold came on the short signal per our trading system on February 6th, and so then since then it closed down about 2%. So it's definitely moving in the right direction, so to speak, for our short. All right, let's look at gold miners. So this is a pretty busy chart, but there's quite a bit of information. I'll try to kind of go over it one at a time. So this green line right there, that's a 200-day moving average, and I've shown this in the past. Like the gold miners closed above it and then collapsed below it, closed above it, failed again, then finally right there it closed above it and then gapped down and continued lower. So this is not a not bullish. This is quite bearish, obviously. And also there is support in this 2120 area here from these two lows, and on just this week, I think on the 12th, when was this 10th or 11th, I think it broke below and closed below it. So also not a good sign. And then right there, this pattern right here, like this big red stick, and the next candlestick after it is called the inside day. You can kind of see it more clearly here. See how this smaller candlestick is completely inside this big black candlestick. So that's kind of like an important consolidation area. And whichever way the range breaks, in other words, from here to here, if the price closes below it or above it, then the price pressure would go that way or this way. So today, the price was really trying to close higher, but it just sold off at the very end of the day and closed at the lows of the day as well. So Tuesday and next week, I'm expecting price to continue lower, especially if this range is broken and like we close maybe at 2060 or so. And then my very least target area is, of course, this 50-day moving average. So currently it stands at 2018, but see how this area right there is a kind of area of a retracement for a Fibonacci retracement. So it's 38 to 61% retracement. So I'm guessing that it should correct at the very least in this area, you know, $20 area. So that's another 5-6% down. We do have a position in DUST, which is a triple leveraged inverse ETF that we opened like right there. So we're in the plus right now, and hopefully it will continue even lower. Let me see. Okay, that's all I want to say about gold. And one more thing I want to mention, natural gas. So I highlighted natural gas at the beginning of the year in January, and mentioned that it was really overdue for a rebound. It actually did rebound like 10% right there, but sold right off and then made a new low again. So what I see here is a slight bullish divergence between an indicator, price momentum oscillator, and the price. But these divergences need to be taken with a grain of salt because they don't always work. So, you know, lower low, but a higher low in the indicator. But, you know, it's really oversold. So it's definitely overdue for some kind of a bounce. And on the next chart, I'll show you that, you know, this is also a United States Natural Gas Fund, UNG. So per our trading system, we, you know, first of all, we determine the primary trend, which is a, you know, prevailing trend of the security, and it's definitely in a downtrend for a while now. And then we look for opportunities within it to go with the trend. So in this case, it's a shorting opportunities, and there were let me see, 3-4 shorting opportunities in this security. 2 of them were really excellent, right there and right there, and then the latest iteration is about, you know, even or so. But, you know, if it does rebound, basically we have to kind of quickly get in, take profits, and ride it as long as, you know, as long as possible. And, you know, this is a very volatile security, so you have to be kind of really careful where you take profits and how fast you get out so that you don't get whipsawed. So, for example, right there on January 14, when I mentioned that the rebound started, it rebounded, but it immediately failed. So this kind of thing, if it does happen and you decide to play it to the upside, then if you're proven wrong, and in this case indeed I was proven wrong, you immediately cut your losses, because otherwise the losses can mount really quickly. All right, that's it for this week. So I wanted to show you how to find us on the internet. You have to go to MasterChartsTrading.com, and we do have a blog there and also a video section where I post this video as well. And we also have public chart section, and you can follow along. Most of the charts are located that you've seen in this video are located in public charts page. Sign up for our mailing list so you can receive these reports in the future. If you have any of the following Twitter, Facebook, YouTube, or StockTwits accounts, please find us there as well. All right, that's it for this week. Thank you for watching and have another great trading week. Goodbye.